Stocks experienced a significant rally on Tuesday as new inflation data suggested that the Federal Reserve may be finished with its campaign to raise interest rates. The S&P 500 rose by 1.9%, while the Russell 2000 index, which tracks smaller company stocks, climbed approximately 5%. These gains were driven by the belief that the Fed may not need to raise rates again, as recent data showed a slowdown in consumer price inflation for October. The central bank has been increasing borrowing costs since March 2017 in an effort to control economic activity and curb price increases. The latest numbers have helped solidify the view in financial markets that the Fed's efforts are effective. The government reported that the overall consumer price index dropped to 3.2% last month, down from 3.7% in September and the lowest since July. In response to this news, the two-year Treasury yield, which is sensitive to changes in interest rate expectations, fell by nearly 0.2 percentage points to around 4.85%. This has led investors to speculate on when the Fed will begin to lower interest rates. However, Federal Reserve Chair Jerome H. Powell recently stated that this decision is not currently being considered by the central bank's officials, as they aim to keep the brakes on the economy until inflation falls further towards their target of 2%. Analysts at BMO Capital Markets believe that this new data rules out a rate hike in December and supports their prediction that the last hike of the cycle occurred in July, with the focus now shifting to the Fed's attempts to delay rate cuts for as long as possible.